What is venture capital and private equity? How does one build a career in these segments? And what are the core skills needed if you're trying to do so? In this video, we're going to try and decode this industry and understand how do these funds work and how can one build a career here. My name is Peeyush. Stay with me till the end and we'll decode everything about this industry as we go along, right? Let's understand first, when we are looking at some of these funds, as to how do these funds work, right? Before that, let's talk about the concept of early stage investing. And when we look at early stage investing, there are sort of nuances or terms that get associated with that. Right? जब हम अर्ली स्टेज इन्वेस्टिंग की बात करते हैं तो कंपनीज का बहुत ट्रैक रिकॉर्ड नहीं होता है, कंपनीज छोटे होते हैं एंड कोई इन्वेस्टर उसमें इन्वेस्ट कर रहा होता है, राइट? सो अगर कंपनी का एक लाइफ साइकिल मान लें तो इनिशियल स्टेज पे जो कंपनी को फंडिंग मिलती है, द इनिशियल स्टेज इन द लाइफ साइकिल ऑफ द कंपनी, इफ यू आर अज्यूमिंग अ फंडिंग देयर, इज कॉल्ड सीड फंडिंग. This is when, somebody just has an idea and they've just decided, okay, let's go and build a business, and you get a seed funding. Usually this is also called, the FFF round, because friends, families, and fools, right? Fools because typically at this point, there's just an idea. So either you are trusted by your friends or your families, or, somebody must be fool to kind of trust you at this point, right? So jokes apart, that's what the seed fund round is. Very small, usually just the beginning idea. You're trying to test waters, you get some money from friends and family, and you start sort of working here. The next round is, let's say you've reached a certain stage, thoda bahut kam ho chuka hai, you have the idea, some working prototype, something is going on. The next round comes is what is called as an angel fund, right? The angel funding round. So these are called angels who are funding you because, again, these are typically high net worth individuals or smallish funds that are basically trying to fund the progress of a particular startup, and they come like angels to kind of help a business grow, and hence the term angel funds at this point of time. Now the business starts growing, and as you start growing, you'll start getting into the realm of VC and PE funding, venture capital and private equity funding. Usually in terms of the timeline and life cycle, the first point is for VC funds to come in. This is where typically you see all your Series A, Series B, Series C kind of happening. And then as the company keeps becoming larger and larger, you have bigger players who are the private equity players kind of coming into it and helping the firm grow further. So somewhere in this is where the growth stage funding kind of happens. The company is growing fast. Globally, private equity funds are very large funds. They also kind of invest in listed companies and then take them private in some sense. A KKR investing in geo platforms, $500 million. Those are the kind of deal sizes that happen. India mein thoda chota amount hota hai, the lesser number is there. There's also sort of an overlap between VC and PE in terms of, a little bit of a blurred boundary between these two segments. PE typically will then exit in either a secondary transaction, another PE fund will buy it, or there will be an IPO that will happen for the firm. And then the firm basically goes into secondary markets after that, right? Which is basically it's in the stock markets. That's the usual modus operandi or life cycle of a particular company when you have a startup coming and, where does the funding happen, right? Now, in our discussion, we're going to focus a little more on the VC and PE side of things because those are the core segments where there is a certain amount of process involved. And thoda size aa jata hai, thoda scale aa jata hai, jobs hain, companies hain, bade funds ho gaye hain. So they are kind of operating in this segment, and that's what we are going to kind of focus on, right? When we go there, in terms of understanding how does a PE or a VC fund work, let's understand key methodology or mode of operation kya hai, right? So these are typically considered as alternate investment assets. So they come under the alternate assets or alternate funds essentially. India mein, for example, they come under the category 1 or 2 AIF, alternative investment funds segmentation. So there's a fund which will get created, and the fund will basically raise money from a lot of investors, right? So a bunch of investors will basically give in money to the fund. The fund managers would kind of pool this money, and then they would make investments depending on the fund mandate, right? They would make investments depending on the fund mandate. Generally, these are sort of closed-ended, longer duration funds. For example, 10 saal ka 10-year fund hoga, and you would have sort of investors who would have given money for that period. And during the course of this 10-year period, typically the fund manager will find investments, find startups where they would be investing. To give a simple example, let's assume there is a consumer fund that is there. So all the investors would basically pull in money in the initial part of the period. And typically this period is where you are kind of getting the money in. Then you start investing it. So there's an investing period that comes. Typically happens beginning part of the fund life itself. Then there's a management period, because these are sort of startups or companies which are early stage in their career. They sometimes need handholding, guidance, management, etc. So these funds also at times kind of provide that. In operational day-to-day requirement, if any help is needed, the funds end up helping the startups a lot of the times. And then comes the final part where the sale or exit is happening. That exit could happen to another fund. It could happen to the company itself. It could happen to another bunch of investors. It could happen through an IPO. तो ये लाइफ साइकिल होगा. इनिशियल कुछ पार्ट में आप पैसा रेज कर रहे हैं और इन्वेस्ट कर रहे हैं एज द फंड मैनेजर. The next part is management of these companies over the next few years. So typically there's a 10 to 12 year period for which the fund is running. The first 2 years are where you're getting money and investing it. The next 4, 5, 6 years are when the management is happening. And towards the end, you start sort of getting out of it. Of course, there's no hard and fast rule that you only have to get out at the end. If you get a good valuation in between, get a good exit in between, you will be able to exit out at that point of time. Okay. So that's the nature of this business. Of course, then you have various roles which are available. There will be fund management, right? So there is a fund manager who's going to kind of manage all these investments that are there. There are going to be a bunch of analysts who are going to scout for ideas, right? You have to invest in startups, you have to do detailed research. So there's a lot of, analysis that is going to happen here. So you'll have analysts who are sitting here. There are people who will get the funding, right? Get the investors to pool in money. So there is a sort of a sales team or team that is going to kind of raise the money initially. And then once you have invested in some of these startups, then there's a team that may be basically assisting some of these startups as well in terms of their day-to-day operations, right? Again, this could be an analyst or an associate who's kind of helping out the team. And so that kind of goes on. In a lot of the funds, these roles may be overlapping with the same team. Essentially, the same person may be raising money, may be managing the money, and may also be advising the startups, or the same team might be doing it, right? So that's the spectrum of sort of activities, how a PEVC fund will typically work. Now, what are the core skill sets that would be needed is to be understood. So in early stage investing, be it VC or PE, remember that the core idea is to look at a business and evaluate whether it can become really large, right? Your investing is like, you're not like a public equities investor or a public market investor where you're saying I'll invest in a diversified portfolio of 50 companies and, average returns is what I'm going to get. Your idea is that in some companies, you're going to get outsized returns and many others may not work at all. So you may make 20 investments or 10 investments and 2 of them will be really big and the other 8 will probably not do as well. So the thought process in terms of understanding has to be you have to be able to kind of understand the landscape, the business, the industry. वो समझ में आना जरूरी है कि क्या business है, क्या model है, कुछ disrupt होने वाला है. अगर disrupt होने वाला है तो क्यों होने वाला है? Why will this business be able to disrupt something? And then you have to kind of dig deeper in terms of understanding that whether this is going to play out or not, and then bet big on it. Correct? For example, if somebody had invested in quick commerce a few years back as a VC or a PE investor, they would have basically thought about, okay, what is the landscape? How is a quick commerce firm going to work? How's the logistics around it going to work? How are the operations of dark stores going to work? What will happen when they kind of get head to head with brick and mortar retail, the sort of traditional retail format that is there? Will people kind of change their behavior? A lot of this discussion will have to go in the mind before analyzing whether you're going to invest in it or not, right? How big would the size be? Will it just be top-up orders or will people move their monthly grocery shopping to quick commerce or not? So some of these questions will have to be evaluated. And because these questions are getting evaluated, you need to have an understanding of the landscape, the industry, and the business. And what is it that this business is trying to kind of change in the existing landscape, right? So wo hona zaruri hai. You have to understand that as you're kind of going along. This also, remember, is a slightly fuzzy space because not a lot of data is available. These are new companies, 5, 7, 6, 7, 8 years in through their life cycle. And sometimes you may not have enough data. So it's a leap of faith a lot of the times that fund managers end up taking here, saying that I like the founder, I like the idea, I think they can execute it, if they can execute it. If somebody can execute it, they would be the ones to basically be taking the market share. They would have the right to win. And I'm going to bet my money on them. So that is basically the thought process that kind of comes here. Of course, there's a bunch of activity that goes. For every one investment, you'll probably be evaluating 10, 15, 20, and then deciding which investment you're going to kind of go ahead with and do. So that's basically the nature. Your core understanding points or the core areas that you want to kind of focus on then include industry analysis and company analysis. Remember, not only traditional industry analysis, but new age industries that are coming up. Sometimes industries themselves are getting created, right? Quick commerce, for example, did not exist 10 years ago. So this industry got created. That subsegment of the retail industry got created. Somebody has to have the understanding of what can change, how will it change, will it work, will it not work, and what is needed to make it work. Which company will be able to kind of achieve that, right? Then you need to understand valuation concepts, which is specific to the industry. अच्छा, यहाँ पे DCF नहीं हो पाता है because obviously cash flows होते ही नहीं initial stages में. या there is a lesser probability of doing DCF. You can do some kind of an understanding in terms of, okay, normalized state, what cash flows would be, and then try and do a DCF with that. But most of the times you're using multiples. Transaction comparables is what we call transaction comparables. राइट, व्हाट डू यू मीन बाय ट्रांजैक्शन कंपेरेबल्स? आप देखेंगे कि उसी स्पेस में पिछला ट्रांजैक्शन किसी और कंपनी का किस वैल्यूएशन पे हुआ है. सेम स्पेस, सेम सब सेगमेंट, सिमिलर सब सेगमेंट. What was the previous transaction that happened for a similar firm? How much valuation was given? So like a PE ratio or a PB ratio or a EV by EBITDA ratio, you're typically going to, at early stages, you typically focus on sales metrics or key drivers like value per subscriber or value per, app download or value per customer or value per order. Something of that sort has to kind of come into the picture, right? You obviously need to have an understanding of emerging trends in the market. Why? Because this is like new businesses coming up. A lot of them would be disruptive in nature. More so if they are on the periphery of tech or innovation, then you have to be even more aware of what's changing there. Purely because every day, every week, there's a new sort of a technology that's going to come out and that's going to create a new startup somewhere. So that understanding of the landscape is very, very important. In addition to the ability to decode the company and its financials. So everything that we do with a company analysis is needed here, but we don't have enough data. So in addition to that, we have to go and kind of have a framework or understanding of how big the business can become in steady state. What are the core data points you're looking at? What are the emerging trends that are coming and disrupting a certain segment? Will it really be able to disrupt that particular segment? And of course, to aid you around this, tools such as Excel and PPT, etc. are also needed, but Excel is generally, the lifeline most of the times. Most of the data is available there. So ability to use Excel and ream through a bunch of data, because remember, a lot of the times these startups also kind of give you data. And while there could be an investment bank involved in between, which is basically cleaning up that data, creating a model, and then helping out that startup, right? It is possible that sometimes you get access to data which is sort of not structured and you have to work on it. So ability to understand Excel, etc. is useful. And it's again a core skill, at least at entry level, analyst level. It is something that is kind of expected from people, right? So clearly a very interesting, lucrative kind of industry if we can think about it. But the challenging part is entry directly as a fresher is very, very difficult. Now, I wouldn't say it doesn't happen. It happens. Companies do sort of recruit people from graduate schools a lot of the times. Very few go to B schools and recruit, but undergrad segment, some companies have tried and started taking analysts there and created analyst programs around those students for a couple of years, where you can join the firm, work in that role for a couple of years. If they like you, you like the work, there's a possibility of getting absorbed. Or you could go ahead and do post-graduation after that and, then chalk out your career accordingly. So these programs have started coming, but typically fresher recruitment is very limited because the kind of skill set that is needed, our education system doesn't really teach us that, right? What happens is movement typically happens from IB and consulting companies. So a lot of private equity funds or VC funds have started sort of recruiting people who have had like a 1-year experience in a consulting firm after, let's say, their undergraduation. And because, there's some amount of understanding that people have about what kind of goes in evaluating businesses, and then you kind of polish them or use them in terms of the core requirement of a VC or a PE fund when they join the fund. So that's something that happens. Investment banks, because they keep dealing with a lot of private equity funds, helping out startups kind of do this. IB also is a place from where there could be a role that could get chalked out, where people kind of start their career in investment banking and then make a move towards private equity or venture capital over a period of time. But otherwise, highly competitive field, limited number of roles. And because it's a highly competitive field, limited number of roles, the skill set that is available or needed here, the skill set is once again non-negotiable. That's practically true with almost all core areas of finance. But this is even more trickier or difficult because this is a very smallish industry. And usually a lot of people come from the consulting or IB background into this industry. The industry does not prefer taking a lot of freshers, at least as of now. Of course, over a period of time, as Indian markets evolve, there will be more such funds, different sizes of funds which will come in. More analysts will be needed, more businesses will come up, more startups will be there. So opportunities are going to increase as you go along. So that's something that we have to keep in mind, that in times to come, these skill sets would be very, very relevant. And I think these jobs will open up. But at this point of time, given the competition, the skill sets tend to be non-negotiable. So that, in a nutshell, is all about the private equity and venture capital segment, what skills are needed, and how do you kind of work on those skills. That's it from me in this particular video. Thank you.